Rick Santelli here, live at CME HQ with some very important breaking news. Personal income for November and durable goods November preliminary. On personal income, up 0.4, exactly as expected. In the rearview mirror was up 0.2, which was the lightest going back to November of last year. Up 0.4 is the best since August, so that's a nice improvement. If we look at the spending side, up 0.2, a little bit of a miss. Up 0.2 back to back, although the last 0.2 now gets downgraded to up 0.1 instead of up 0.2. If we look at real personal spending adjusted for inflation, it moves up to 0.3. That's followed by a slightly revised lower up 0.1. Up 0.3 is the best since July of this year, so we'll call that 5 months. And now the important numbers. PCE deflator, month over month. Down a minus sign, minus 0.1. We have not had a minus sign since April of 2020. April of 2020, and that was minus 0.4. That's what we're comping to. And if we look at the deflator from a year-over-year perspective, it is up 2.6. That follows a downwardly revised 2.9, and 2.6 is the lightest level going back to February of 2021. Now, the most important two, core deflator, PCE month over month, expected to be up 0.2, is up 0.1, and last month's 0.2 also becomes up 0.1. And finally, the year-over-year core deflator, the most important number in this series, in my opinion, up 3.2%, 0.1 lighter than expectations. It is 0.2 lighter than a 0.1 revision from last month's 3.5 down to 3.4. How does 3.2 stack up? 3.2 would equal the best level going back to March of 21. March of 21. Now, you see yields have moved up slightly. I think that the biggest issue there happens to be some of those income numbers were a bit on the high side. But let's do durable goods, and maybe you'll see why. 5.4%. 5.4% on our November preliminary read. That is a whopper of a number. Last month we had minus 5.4, which now becomes minus 5.1. So there's a bit of mean reversion here. But no matter what, if we just look at it on the face, 5.4, you have to go all the way back, to May of 2020 to find a higher number. But as I said, to some extent, it's kind of reversing what we saw last month. Ex-transportation, we could really see what moved this number. It's all about transportation, aircraft, because now that 5.4 drops to 0.5%, 0.5%. However, that's still multiples better than we are expecting, and it follows a downward revision from unchanged to down 0.3, which also has a mean reverting factor there. That would be the best month-over-month change on its own at up 0.5%. Going to May of this year. And finally, if we look at capital good orders, non-defense ex-aircraft, a proxy for capital investment. Wow, this is a whopper too. Up 0.8%, up 0.8%. That is the best since it was up 0.9 in August. The problem is in between there, of course, we had some downward numbers. Last month's down 0.3 doubles to down 0.6. So even though there's some strong numbers in the durable goods, a lot of it is reversing some revisions that pushed us weaker last time. Net, well, on a 10-year, we moved from 385 to 387. Pre-opening Dow futures were down, I think, Joe, about 100, and now down about 135. Looking at these numbers, there's definitely been some progress, and I'm sure that we're going to see some of these month-over-month numbers on the deflator get annualized. I think that's a little bit of a tricky game. I don't think inflation's linear.